Welcome back. As I said, PACB is going to report on their earnings on 3rd of August. As always, we have a need to preview what could happen. We can't help it as retail investors to always try to peek ahead and see what's in store. So it's an interesting exercise, and I use different approach with every company depending on what kind of data is available, whether the company is revenue generating company with previous records, and if there's a consistent trend in their performance. All those things make a difference on how I calculate my estimates, and I suspect that's how different analysts do their own estimates. So I use a different approach for every company, and I have used a unique approach for PACB also. Usually I'm the only audience for my analysis, but for the first time I'm sharing it with you guys. So please let me know if you find any way to improve it. If you have some suggestions, I would be most welcome to adopt that. And yeah, with that said, let us quickly look at each element of the earnings report for Q1 2022 and see what to expect in Q2 22. That's the overall high-level approach that I have. So I would like to take you to my spreadsheet and walk you through the major facts this past quarter based on news report, because most of these companies, when they operate, all the big events are reported. And I have looked at news reports to find out if there are any news items that are worth mentioning for Q2. And I have a few of them that I would like to talk to you about. And next, I will walk you through my assumptions that underpin the estimates. To make my assumptions, I'm going to look at past performance and consider the market condition and available information to make an estimate. This way, we will first estimate the revenue and making the assumptions, and then we'll plug it into the spreadsheet to calculate EPS and EBITDA. So this spreadsheet is basically made from data taken out of Yahoo. And the estimate section is the one that I am populating. So let's get to the spreadsheet. Well, let's look at my estimation spreadsheet. This is specifically made for PACB. First section I'm going to talk about here is the facts that we have, which I'm not able to allocate or show effect in the P&L or balance sheet. The first one is that the company granted stock options on somewhere around June 22 for 100,000 shares. I think the price was 4.25 per share to new employees. So we don't know how many new employees got it and how it's going to impact the numbers this quarter. So I've just mentioned it here. It's not factored into my estimate. The other thing is the news article that says PACB collaborates with ILAC and Robotic Biology Institute to develop automated workflows. So I do not know how any monetary arrangement between them is going to impact the earnings this quarter, either in terms of receiving money or paying money. So that's been not factored in. And next, I have made a few assumptions. One of the major assumptions I have here is that even though Big Pharma lost revenue due to the COVID wave receding, our revenues for PACB is not going to decline in any way, mainly because Big Pharma had addressed specifically COVID-19 with the vaccines. And when COVID wave receded and all the vaccines were done, there was a drop in their revenue. I don't think the same case applies for PACB, because PACB is selling its equipment for use against various kinds of viruses and organisms. And that market is not going to be impacted by the waning of the COVID wave. That said, depreciation and unusual items are, I assume, to be close to the same as last year, not much difference, because we don't have visibility into it. Tax provision, as I can see in the chart, it was made last year. If you look at this section out here, you will see last year it was made in the September quarter and then refined in the December quarter. So I'm going to expect the same thing for this year. So I'm going to keep the tax provision as 0 in this quarter. And the latest news, which is very good for PACB, which is probably why their share price went up the last couple of days, is that PACB initially had a tie-up with Invitae, where Invitae was funding initial development activities with PACB, and they had a say in how the products would be developed and what will be the ultimate state of the product. And at this point of time, they seem to have agreed mutually to separate themselves from that kind of an arrangement, in the sense that PACB is now free from Invitae, as it will retain all input benefits from Invitae without any contractual obligations. However, this comes at a cost of credits in future purchases given to Invitae to offset their initial development investment. This is very good for PACB because now it means that PACB got interest-free funds to do their initial development. And now they have got a captive customer because Invitae, if it wants to buy any more hardware, it will naturally look at PACB until it at least it exhausts the credits in order to claw back their initial investment. So overall, it is very good for PACB. That said, I would like to go in and start having a look at all the income elements for this year. As far as the cost is concerned, I'm just going to prorate it against what was there in the previous quarter. So having looked at that, I'll say that in Q1, PACB delivered a record of 50 Sequel 2 systems during the quarter compared to 41 for the same quarter in the previous year. I'm assuming that we would just have delivered 52 Sequel 2 systems in the Q2 quarter. It's a very marginal increase that I'm taking considering the overall environment. It's still an improvement. And the installed base, which was at 424 Sequel 2 systems at the end of 31st March 2022, is now going to be 476 because we have added 52 to the 424. So that is the installed base, 476 as of end of June 2022. With that out of the way, let us look at the three major revenue streams. One is the instrument revenue stream, the other is the consumables, and the third one is the service. Now let's take a quick look at this box out here. In this box here, what I have done is I have tried to take the Q1 2022 numbers and compare them with Q4 2021 numbers and see how much growth was registered. And that came to 4.7% for instrument sales, 22.12% for consumable sales, and 32.43% for service sales. And next I went to the PACB website and took their Q1 2022 earnings. It was 14.3 million for instruments, 12.2 million for consumables, 4.1 million for services. Then I applied all these percentage growth for each of them. And for Q2 2022, I have a revenue estimate of 14.97 million for instrument sales, 14.89 million for consumable sales, and 5.429 million for service sales. The total comes to 35.3 million, which I have plugged in here in the profit and loss account as the base case. We'll visit this later. Let us continue looking at the next box out here. In the next box, I have assumed the improved performance that could probably happen for this company. And I have bumped up the growth of instrument sales to 5% from 4.7. I have bumped up the sales for consumables by 5% from 22.12% to 27%. And I've added another 5% to service sales and bumped it to 37.0% from 32.43%. And that gives me instrument revenue of 15.01 million, consumable revenue of 15.49 million, and service revenue of 5.61 million. That takes me to the best case scenario of 36.12 million when it comes to the revenue. I'm, however, going to take just 35.3 million as the revenue for this quarter in my further estimates out here. Before I go any further, let me show you what Yahoo has got as estimate from 6 analysts. So if you look at the analyst estimate in Yahoo for PACB, we have 6 analysts who have done estimation for current quarter. Out of them, the average estimate for earning is coming to minus 0.32, and low estimate is minus 0.37, and high estimate is minus 0.24. So 0.24 minus 0.24 is the best case scenario, and the worst case scenario is minus 0.32. Sorry, minus 0.37. So this is what it looks like. And when compared to ours, we were saying that we are going to be between minus 0.35 and minus 0.34. So we come somewhere between average and low estimate. And when you look at the revenue estimate for this company, there were 5 analysts who have given revenue estimate. The average estimate is 35.7 million. The low estimate is 35 million. And the high estimate is 37.5 million. When we look at our own estimates, we have come between 35.3 to 35.6 million. So we are somewhere closer to the lower estimate that they have. So it's very conservative. Hopefully we turn out to be right. Now coming back to our spreadsheet, if we look at the profit and loss account here, I have plugged in 35,300, and most of the other columns are calculated by formulas. Now these formulas in black out here are formulas that work vertically. That is, they are used for calculating the other elements out here. In terms of, let us say, operating expense or normalized EBITDA. Whereas I have some more formulas out here, which I'm using to bump up the elements from Q1 2022 proportionately, so that, like, for example, cost of revenue, it was 19 million in the previous quarter. I bumped it to 20 million. So those kind of assumptions have been made here. I won't go through each and every one of them, but I have just made modest increases in most cases. And if we look at what we have, is that the gross profit estimate is 14.4 million, and operating income is going to be minus 0.80 million. And if we were to look at our shares out here, basic average shares, I have used the progression that I have seen before, and come up with the basic average share numbers that will be there, which in turn reflects the EPS. We are looking at an EPS of minus 0.35 per share. And when we look at overall normalized EBITDA, it comes to minus 77,437, that is minus 77 million. So this is my estimation out here. But the street is going to decide whether it's happy or not, depending on what PACB is going to publish. I personally think that PACB should come out very well. Let us look at what TradingView has to say. So here we are in the TradingView platform, and I'm in PACB. And as you can see, PACB has fallen significantly. It's already at the very bottom. So I see very limited downside risks out here. We already have a support here at 3.93. And if we look at the earnings estimate out here, TradingView platform is calling for an earnings estimate of minus 0.34. We are slightly worse than this. This is more optimistic. And the revenue estimate is 35.7 million. We are just marginally shy of 35.7 million. When we look at our own estimates, we are at 35.3 to 36.13. So this kind of falls between our range. So I think more or less our earnings passes the sanity test. It will be very interesting to see what happens when the earnings are actually declared. With that said, I think I would like to bring this video to an end. You can always post your comments below and give me some pointers if you think there is something I can improve on this, or if you find some logic not matching to what you're thinking. There's always scope for improvement. This is our initial earnings review. And I think I would like to end this video here. Please put a like there if you did like it. A lot of work is gone into making all these videos, and a like from you will definitely motivate me a lot. And if you're not yet subscribed, please subscribe and help us grow this community. Thanks and have a great day. Bye for now.